Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP 500 view using the emini futures contract and put together a plan for the week ahead, looking at some high probability action areas and some price targets that we can really realistically expect to test. Before we jump into the technical picture, as always, just want to keep abreast of the macro side of things in terms of market narrative and dynamics driving the market as we head into this new trading week. Obviously, the major news over the weekend is Trump's move on tariffs, which has led to another round of volatility to start the trading week with another significant gap down in markets. And we will see now over the remainder of today if these tariffs are actually implemented. The significant ones against Canada and Mexico, and also China tariffs as well, facing 10% tariffs. The tariffs themselves come into effect this evening at midnight Eastern Standard Time. So it's going to be important to see whether or not we get a round of negotiation throughout the day. If that negotiation starts and looks positive, I would expect that we could see a relief rally develop, certainly at least in the S&P 500. It's going to be important to see whether or not Trump is just using this as a bargaining tool to drive preferential trade terms with these countries, or whether or not it is a blanket tariff that's going to be implemented tonight. And if so, if that is the case and these tariffs do come on, then I would expect there's potential for another round of volatility later today, and certainly in the Asian session. So you want to be cognizant of the potential for that volatility heading into the back end of today and on the overnight position. Certainly, if you're running overnight positions, you want to factor that into your position sizing and your stop management. As we get through today, the focus then on top of the tariff scenario is once again we've got another round of tech earnings to keep an eye on. We get Palantir this evening after the close, get Google tomorrow after the close, and then we will hear from Amazon on Thursday. We also get MicroStrategy on Wednesday after the close. Worth noting there that obviously Bitcoin has taken a dive well below the 100,000 level now, and that is likely to weigh on sentiment with respect to MicroStrategy. So that earnings call could be interesting. Certainly, if we maintain the 100K area as resistance for Bitcoin, that's not going to be helpful to that firm. And then the focus will slowly shift towards what I think could be a significant catalyst this week, which is the US payrolls data on Friday. We also get benchmark revisions for that data, along obviously with the print itself, where with the employment data and the all-important hours earned and the way the employment percentage as well. So it's going to be key, I think, this week to see how these three narratives and dynamics intersect, because there's certainly, I think, at this stage, if these tariffs or if these tariff threats aren't walked back today, I think we could be in for a rocky ride. Before we jump into the charts, take a look at the seasonality patterns that I've been tracking, and this is a 25-year look back, and obviously we're just looking at post-election years, and that suggested we would see some weakness into the close of January, which we certainly got. The pattern indicates that we could actually see some strength here into the back end of this week. So that would roughly coincide with the idea of getting some type of relief rally developing throughout the week, and then heading into Friday's payrolls data. That could be a more significant catalyst, because the seasonal pattern suggests that we do see a local high develop here into the back end of February, before a more sustained period of downside action, leading into what could potentially be an annual low into the first part of March there. So certainly I don't trade just blindly off seasonality, but it is a good confirmation tool to keep in your back pocket. So let's take a look at the charts and see where we're up to. On the weekly time frame versus the 5,800 level, we have an upside target, a 5=1 objective at 63.50. We also are tracking a 5-wave sequence from the lows that we saw into August last year at the 51.16 level, which suggests we can target 62.46 before that 63.50 comes into sight. So those are the upside objectives that we're working with at the moment, and really they don't certainly the 63.50 wouldn't come into question unless we start to trade meaningfully below the 5,800 level. So in terms of the weekly volume weighted average price on the 5-period look back, it's coming in at the moment at 60.24. That's going to be a key area as we head into today's session, because unless we can get back above there, then the weekly momentum it would shift to the downside. In terms of what the options market is pricing and where we can see potential support and resistance come in there, it's about 104 points of movement to the up or downside versus the open last night. So that gives us 60.86 on the upside as resistance and 58.78 as potential support. Note we also have the weekly R1 coming in just below there at 58.63. You can see my positions and stops in the corner here, so I won't talk any more about those. That's self-explanatory. Let's take a look now at where I see the opportunities potentially for some swing setups as we head into this week. So we had a gap down last Monday, and obviously that gap was bought pretty heavily into the European session, and we basically spent the rest of the week grinding out to the upside before volatility kicked in on the close on Friday. So we have another gap down now to navigate, and we can see that the subtle difference here, to my mind anyway, is that although we had this V-type bottom experience last week, heading into the back end of the European session just before New York opened, which ultimately was the low of the week and took us higher. This week, you can see we're putting in more of a consolidation or a pause here. And that suggests that I think we'll see at least an attempt for buy sellers to take us down for a test lower. And the targets on the downside, if we take out the overnight low, so we have an overnight low of 59.36. If we take that out, I'm going to be paying close attention to a couple of key levels. And firstly, it will be the weekly bull bear zone that I'm using for the week ahead, which is going to be 5,900 to 58.90. Now, just ahead of that 5,900 here at the 59.09, we actually do still have a gap, an unfilled gap, and it coincides with this low volume area, low volume node on this 4-hour profile. So I would be paying very close attention if we do take out the overnight lows and trade down into this gap zone as low as the 58.90, then that would be an area where I'd be looking at potential long setups. Now, you can play it on a reclaim, so you wait for price to break down and trade back through that level. You can play it as a swing position on the initial test of those levels, or if you're using intraday charts and you're at the screens, you can look for intraday divergences to signal an entry there. But that's going to be the first key test for me on the downside, is any move into that 58.90, 59.09 zone, which is my weekly bull bear zone. If we hold there, then we could potentially, certainly if we get some positive mood music on the tariffs throughout the day, then that could be a tradable low, certainly for the week. And we look then to trade higher into the back end of the week. If we take out that area, the only other area I'm going to be paying close attention to on the downside is going to be that 58.78, which is that options implied move for the week, and that also could act as support with the weekly S1 coming in, like I say, just below there at 58.60. So those are going to be a couple of key levels on the downside that I'm personally going to pay attention to. So let me just draw in what it is I would anticipate we can see. So we take out the overnight lows from the overnight highs as resistance, and we trade down into the support zone. And if we do find that buying or buyers stepping in there, then we're going to be targeting the gap to the upside. That's going to be the initial objective for this move back into the 58.60s, and then above there at the 58.80s. We have our weekly projected range resistance from the options perspective. So that's that would be my preferred scenario at this stage. Now, obviously, we have to work with what the market gives us, and if we aren't getting any positive new music with respect to the tariffs, then I think we can realistically expect that if we take out the weekly projected range support, then I think we're going to take a deeper look back down into the 5800 level. And that, like I say, will be a key area to defend, because if we don't, like I say, there is certainly the potential then that markets would deem that we have a potentially more meaningful top in place, which would suggest that we could be looking at a move down into the 57.30s as the next downside objective. So those are the key areas I am watching as we start the week. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.